Today we are talking about why BAT Bank in Indonesia actually chose ZedPay technology for building their own infrastructure rather than creating their own technology from scratch. Because recently I saw a LinkedIn post where BAT Bank was addressing this issue. Welcome back to the CryptoInvestar Podcast. I'm your host, Daniel Leinhardt. Today we are going to have a very important conversation about something that many people in crypto and Fintech completely misunderstand. Because recently, BAT Bank, they confirmed integration and collaboration involving ZedPay technology, and immediately a lot of people started asking the same question: if BAT Bank decided to do this, why didn't they just build their own technology? And honestly, that question sounds simple on the surface, but once you really understand modern finance, fintech, infrastructure, banking systems, and digital transformation, you realize that the answer is much deeper than most people think. Because this conversation is not really about one company choosing another company's technology, but it is a conversation that is actually about speed, about scalability, about modernization, about infrastructure efficiency, about digital evolution, and about how traditional institutions are adapting to a rapidly changing financial world. And personally, I think this situation tells us something much bigger about where finance itself is heading globally. Because I believe that the old banking model is changing. Let us start here. For decades, traditional banks controlled almost everything internally. They built their own systems, they built their own infrastructure, they built their own operational technology, their own transaction frameworks. But the world has completely changed now. Technology is now moving faster than traditional institutions can comfortably build from scratch. Technology is now moving faster than traditional institutions can comfortably build from scratch. And this is happening globally, not just in Indonesia. Even major banks around the world, they now partner with fintech companies instead of trying to reinvent every system internally. Why? Because I believe modern digital finance, it moves extremely fast. So by the time a traditional institution spends 5 years building one platform, the market has already evolved 3 times. Consumer behavior, it changes very quickly. Payment habits, they change so quickly. Digital wallets, they evolve so quickly. Cross-border finance, they evolve so quickly. When you look at blockchain, it evolves so quickly. The Gen Z's behavior changes so quickly. And institutions are realizing something important, that sometimes partnership is smarter than rebuilding everything from zero. Because when you look at ZedPay, it actually represents something that is big and wide. Because ZedPay, it positions itself as a technology-driven fintech ecosystem that is involving multiple currencies, wallet systems, yes, various wallet systems, digital payments, card infrastructure, and crypto adjacent financial services. And honestly, that's the part that most people underestimate. Building a secure payment infrastructure is extremely difficult. Yes, extremely very difficult. People think that creating fintech systems is easy because the apps look simple on the front end, but behind those apps there are compliance systems, there are transaction monitoring, there is payment routing, there is a liquidity system, there are security layers, there are fraud protection, there are currency settlement infrastructure, a lot of technical integrations, scalability engineering. A lot is happening. All this take years. They take massive capital, they take massive testing, they take massive operational experience. If a technology company already spent years of building functioning infrastructure, a bank might decide that it is smarter to integrate it and adapt to it rather than spending years rebuilding similar systems internally. And honestly, that's the common mistake in modern business right now that they are doing. Spend years building the same that is existing. For example, take the Apple instance. Let me give a simple example that people can easily understand. Even giant companies like Apple don't build every single technology component themselves. But they partner, they integrate, they acquire, they adapt existing infrastructure and make them different, completely different, and their own brands. Why? Because business is not always about owning every piece, but sometimes it is about speed, it is about strategic positioning. And why? I think this may be part of what BAT Bank is saying, because digital finance competition is becoming intense globally, and banks are now competing not only with other banks, but with fintech apps, with crypto wallets, with payment startups, with digital exchanges, with cross-border transaction platforms, with AI-driven finance tools. So, institutions must modernize faster than before. They must modernize really so fast than before. Building from scratch might be even more risky. Now, this is another thing that many people overlook, because building internal systems from scratch sounds attractive, but it can actually become extremely expensive and even risky. I've been looking at this, really having a lot of intense research doing this episode, because when you look at modern finance, imagine spending millions of dollars, spending several years of development, hiring engineers, building compliance systems, building wallet infrastructure, building transaction architecture, only for the market to change before you finish. That's dangerous. That's so dangerous. And many institutions now prefer adapting proven infrastructure instead of delaying modernization. This is exactly why fintech partnerships globally are exploding. Traditional institutions are realizing that they do not need to invent everything themselves, but they simply need strategic integration. Now, this even becomes even more interesting once blockchain and tokenization enters the conversation, because tokenization itself is creating entirely a new financial possibilities: real-world assets, digital ownership systems, cross-border payments, programmable financial systems, integrated digital finance, and financial institutions know they cannot ignore this forever. The financial world is completely shifting, slowly, but it is shifting. So, partnerships involving fintech systems, blockchain infrastructure, and banking institutions, they are becoming increasingly important globally. Personally, I think that BAT Bank decision, it reflects a larger institutional realization that the future of finance will likely involve collaboration between traditional banking and newer technology ecosystems, and not isolation. I've been really trying to analyze this deeper, and I think that the Gen Z's behavior is also influencing most of these decisions. Young people today, they want to interact with they interact with money differently, very, very differently. Many young users now prefer mobile first finance. They prefer instant payments, they prefer digital wallets, they prefer borderless systems, they prefer integrated apps, they prefer crypto accessibility. They want those simplified user experiences. So traditional banking systems were not originally designed for this digital native generation, and institutions now know this. That's why fintech partnerships matter strategically, because fintech companies often innovate faster around user experience and digital behavior, and if banks fail adapting this, they risk becoming outdated to younger generations, which is very, very risky. Now, personally, I think the biggest mistake that people make is viewing this situation too narrowly, because this is not simply banks using another company's technology, no, but it is actually about strategic acceleration, about positioning, about modernization, about infrastructure efficiency, and potentially about preparing for the future of digital finance and tokenized economies. Because once banking institutions begin integrating advanced payment systems, about integrating digital wallet ecosystems, blockchain-related infrastructure, and these fintech technologies, you start seeing the early foundation of a very different financial future. You start seeing the early foundations of a very different financial future. Now, let me speak honestly. I think that many traditional institutions, they underestimated how quickly digital finance would evolve. Yes, because right now crypto changed conversations, fintech changed user expectations, AI is now changing financial interactions itself, and institutions, they now face a difficult challenge: how to quickly adapt, all risking becoming relevant slowly. Because I believe that strategic partnerships may become one of the smartest survival strategies. These strategies will make institutions move forward, because nobody can dominate every layer alone anymore. I've been looking at UNIT token, trying to integrate with BAT Bank and then integrating with Quantum Exchange. 3 mega companies uniting to build an ecosystem. And this is good. The financial future is becoming interconnected. Banks integrating with Fintech, blockchains integrating with payments, tokenizations integrating with infrastructure, and all of it is increasingly blending together. It is integrating. They are blending all together. Now, of course, the big question moving forward is execution. Can these partnerships create real efficiency? Can they scale properly? Can they maintain trust and compliance? Can they improve real-world financial accessibility? Because eventually, real utility matters more than just announcements. And the world is watching carefully now. Whenever traditional institutions begin interacting with blockchain connected infrastructure and fintech ecosystems, the world watches closely. So overall, I don't think that BAT Bank choosing ZedPay technology, it means weakness. Honestly, it may actually reflect strategic intelligence. Because in today's world, speed, adaptability, the integration may matter more than just trying to build every single system internally. And this story may actually represent something much bigger. The gradual merging of traditional finance, fintech innovation, and blockchain infrastructure into one connected digital financial future. This is amazing. This is amazing. Thank you guys for listening to today's episode of the Crypto Investor Podcast. I'm Daniel Leinhardt, and today I want to ask you something. Do you think traditional banks should build everything themselves? Or do you think that these strategic fintech partnerships are the smarter future? Drop your thoughts. Let me know what you think. Subscribe to the podcast. Share this episode to any person that you think will benefit after listening. Until next time, stay safe, stay informed, and keep building wisely.